All right, so you've been doing a deep dive on Tesla, and you've brought us all your research, a pretty detailed document covering the business, their leadership, and how they're valued. And I guess our goal here is to kind of go through all that and kind of pull out what we think are the most important takeaways so you could get up to speed quicker on what you really need to know about this company.
Yeah, exactly. We're filtering out the noise here and focusing on the important stuff, both for understanding the business, but also for considering it as a potential investment. Yeah, we're working with all the materials that you brought us here. So
And right off the bat, one thing that I thought was pretty interesting was last year in 2024, Tesla's revenue was just shy of $100 billion, which is obviously a massive number, but they weren't the number one EV seller globally. That was BYD.
right.
So that already, raises some questions about how we evaluate their position in the market.
Yeah, that's interesting right off the bat. That tells you that it's kind of a complicated story, right? That they're selling high value vehicles, but they're not necessarily selling the most units. So it's worth looking into for sure.
Yeah, definitely. So in this deep dive, we're going to split things up into two parts. In the first half, we're going to cover Tesla's core business model, the people leading the company, and their overall financial health. And then in the second half, we're going to take a look at what the market is saying about Tesla. Who are the key players in terms of ownership and the biggest risks they face. And I'll also tease that we're going to leave you with a pretty interesting thought at the very end. Looking forward to that.
All right, so let's dive right into their business model. So one of the first things that stands out is this direct-to-consumer approach, right? Unlike a lot of car manufacturers who rely on those franchise dealerships. Right, exactly. So they have their own showrooms and an online platform, and I think one of the main advantages there is that they have a lot of control over the customer experience, and they can get feedback directly and use that to improve their products and their strategy, which is also it's also a way to keep more of the margin that a dealership would take.
Yeah, it definitely does feel like a very different experience than buying a car the traditional way. And, it does seem like that does foster a lot of that connection they have with the brand. But, their revenue stream isn't just vehicle sales, right? It seems pretty diverse.
That's right. They're not just selling cars, although they do sell a lot of cars, the Model S, the 3, the X, the Y, and now they've got the Cybertruck. But they also have a pretty big energy business. So that includes solar panels, their solar roof product for generating electricity, and then the Powerwall and Megapack for energy storage at the residential level, even at the grid level. And then I think it's really interesting that their supercharger network, which, was previously only open to Tesla owners, is now being opened up to other EVs.
Yeah, which seems like a really strategic move, right? I
Yeah.
mean, they have this big piece of infrastructure that they can now potentially monetize beyond just serving their own customers. So just to give some figures here, in 2024, like we said, nearly $100 billion in revenue. And they delivered almost 1.8 million vehicles. If you look ahead to this year, 2025, the base prices for their current models range from, in the mid 40,000s for the Model 3 and Y to the low 80s for the Model X and Cybertruck.
Yeah, and one thing to keep in mind going forward is that they're actually, looking to release some more affordable models, maybe even later this year, which could really broaden their market. Speaking of broadening the market, they're actually expecting a 50% increase in their energy storage capacity this year, which is pretty significant and just shows how committed they are to that part of the business. That whole supercharger, becoming a source of revenue is really interesting.
Yeah, it's definitely something to watch. Going beyond just individual products, it feels like they're building this whole ecosystem, right? It's not just buying a car. It's like buying into a whole suite of, interconnected products and services.
That's right. I mean, you've got, they're trying to offer vehicles at different price points, for different kinds of customers. And then you've got those integrated energy solutions for both homes and businesses. And then they've got the services, maintenance, the over-the-air software updates, which are really important, and give, the continued improvement in the vehicle and, of course, access to that supercharger network. I think they're really looking at, eventually building out a robotaxi service. So it really is kind of a, holistic vision.
Yeah, and just to, for those looking ahead a little bit further, the redesigned Model Y, which is being called the Juniper, is expected later this year with a slightly higher base price. And there's some speculation about, maybe a lower cost Model Q and even the next generation Roadster at some point down the line. So it seems like they're not just sitting on their current lineup. So when we think about their overall size and position in the market, we mentioned that they have a global presence, but that BYD thing, right, being outsold in 2024 by volume is pretty key.
Absolutely, it is. And it's important to keep in mind, their market capitalization is still massive, anywhere from $571 billion to $800 billion as of March of this year. And, they have 4 active automotive manufacturing facilities. So they're in the US, China, and Germany. And then that supercharger network, right, over 7,100 stations in 52 countries. It's quite a logistical accomplishment.
Yeah, so you have number 2 in global EV sales last year, revenue approaching 100 billion. They're clearly a major force. Their inclusion in all the major stock indices has historically signaled, I guess, a degree of stability, but that recent stock price decline in 2025 could be a sign that investors are maybe becoming a little bit more wary. And analysts are projecting about 418,000 vehicle deliveries in the first quarter of this year, which is still, a huge number, but I guess maybe signals that some of that hyper growth from the past is tempering a little bit. Projections are still for over 2 million annual vehicle sales by the end of 2025. But I guess that stock price movement suggests that maybe the market is making an adjustment as competition heats up. So I guess what is it about Tesla that really appeals to customers? What's that value proposition that makes people, choose them?
Right.
Well, I mean, I think their core mission really resonates with a lot of people, right, to accelerate the world's transition to sustainable energy. And they have, a unique combination of those high-performance EVs with integrated energy solutions. But it really comes down to what appeals to customers: the range, the performance, the technology. They've got autopilot and FSD, which is full self-driving, and then that reliable supercharger network.
Yeah, they really do seem to have tapped into something beyond just getting from A to B, right? It's about innovation. It's about environmental sustainability. It's even about a certain kind of aspirational lifestyle. The Model Y, for example, is marketed not just as an SUV, but, as a vehicle with a certain range, a certain performance, with autopilot, with, strong resale value. It seems like their marketing really leverages the brand, emphasizing sustainability and innovation, and that strong brand loyalty that they've cultivated often means that, people are willing to pay a premium for their products. Exactly. And if you connect that to what's going on in the broader industry, the analysis shows that the EV market is expanding really rapidly globally. There's more environmental awareness, supportive government policies, better battery technology. And we're also seeing a lot of growth in energy storage, which is, really important for integrating renewable energy sources into the grid.
Yeah.
And, analysts are generally predicting, significant long-term growth in that EV market.
Yeah, and the financial projections that you've included here suggest that Tesla could reach over $127 billion in revenue in 2025, driven by increasing vehicle sales and the adoption of that FSD technology. However, there's also this expectation that maybe their sales growth rate will moderate a bit this year because of competition and maybe some level of market saturation in certain segments globally, though EV sales are projected to rise pretty dramatically through 2030. And Tesla itself anticipates that their energy storage deployments will increase by 50% year over year in 2025. So the long-term market trends seem favorable, but maybe some near-term challenges for the auto part of the business.
Yeah, I think that's a really important point. The long-term picture for EVs and energy storage looks really good, but Tesla's facing some serious competition in its core auto business. We're seeing a lot of established automakers like Ford, GM, Volkswagen, they're all pushing into the EV space. And then you've got these dedicated EV companies like NIO, BYD, Rivian, Lucid. And it's worth noting that those Chinese companies, NIO and BYD, they're expanding internationally as well. The traditional automakers, obviously, they have those advantages of existing manufacturing and dealer networks. And, even in the luxury EV segment, the competition is increasing. You've got Porsche, Audi, Mercedes-Benz, they're all getting in on the action.
So a lot more crowded, right? Then the automotive industry is also known for being, heavily regulated, right, from safety to emissions.
Right, absolutely. And government policies, they can either be a help or a hindrance, right? They can offer incentives to, boost demand, or they can put in regulations that are really challenging to deal with. Tesla's FSD technology, it's been facing a lot of regulatory scrutiny and safety concerns. Stricter emission standards in places like China can be hard to meet. And then, even those EV tax credits, they can help boost demand, but then there's always the risk that those policies could change. And the whole regulatory landscape around autonomous driving is still really complex and uncertain, which definitely affects, Tesla's robotaxi plans.
Yeah, so, historically, the automotive industry has been, notoriously difficult to break into, right? The huge capital investment, the complex supply chains, building that brand trust. And Tesla managed to overcome those hurdles as as an early innovator in the EV space. But do those same barriers exist for new players trying to get into the market now?
Well, it's interesting because the traditional auto industry, yes, it's had these huge barriers to entry, but in the EV market, we are seeing new companies pop up. However, I think Tesla's existing supercharged network is a pretty big advantage and a barrier to entry for anyone trying to compete with them. I mean, they've got over 7,100 stations in 52 countries as of March. Trying to build that kind of charging infrastructure quickly would be a huge task. So while we are seeing new EV companies, Tesla's charging and their brand, that's not easy to replicate in a short period of time.
So all things considered, what would you say are Tesla's biggest competitive advantages in this changing market?
Well, I mean, first of all, they have an incredibly strong brand. It's associated with innovation, high performance, sustainability, and that translates into a lot of customer loyalty and the ability to charge premium prices. Um, and obviously, Elon Musk's role in building that brand has been huge, although, that can also be a risk. Their direct sales and service model enhances that brand connection and the customer experience. The Tesla brand, it represents the future of autonomous driving. It's seen as being, on the cutting edge of technology. Their marketing leverages that brand really effectively. They don't have to spend a lot on marketing. They have those high profile events, those product launches that reinforce their image as innovators. Obviously, there's always a risk of, negative sentiment towards Elon Musk, but overall, their brand value and that high market cap, those are really significant advantages.
And it seems like, beyond just the brand, they're also focused on the nuts and bolts of manufacturing, trying to get their costs down, right?
Absolutely. They're trying to achieve cost advantages by scaling their production, making sure those factories are running at full capacity. Their vertical integration strategy, especially when it comes to batteries, is potentially a way to reduce costs and control their supply chain. The scale of their gigafactories, like the one in Shanghai, that contributes to economies of scale and lower per unit costs. An analysis from firms like Baird suggests that, cost cutting and factory utilization is going to be a big part of their growth going forward. In the past, their partnership with Panasonic helped them lower battery costs. The Shanghai mega factory is expected to be even more cost effective because of the supply chain advantages there. So, streamlining production, controlling the supply chain, these are all really important for them to stay competitive on costs.
Yeah. And we can't forget about those network effects that we mentioned earlier, right? I mean, that supercharger network and the massive amount of data they're collecting from real-world driving, that's feeding into their autonomous driving. That seems like a real advantage that would be hard for someone else to match.
Definitely, the more Teslas there are on the road, the more valuable that supercharger network becomes, which makes it more attractive to customers. It's a positive feedback loop. And then they've got all this data from real world driving, over 3 billion cumulative miles for their FSD
Mm.
supervised as of January of this year. That's a lot of data to feed into those algorithms, making the AI more robust and reliable. Those kinds of network effects in charging and data, those are really hard to replicate quickly.
Yeah, it sounds like once someone has bought into the Tesla ecosystem, they're probably less likely to, switch to a competitor.
Yeah, that's the idea. There are switching costs for customers who, have invested in the vehicles, the home charging, maybe even the solar and storage products. Uh, you know, the seamless integration of hardware and software, the over-the-air updates that constantly add new features and improve the car, all that contributes to customers sticking with Tesla. And then the integration of services like the supercharger network and the app, that
Mhm.
creates a user experience that's really convenient and familiar. Even the fact that, the supercharger network used to be exclusive to Tesla owners, that also made it harder to switch. So, all these things add up to create those switching costs.
And finally, they also have some, unique assets and capabilities, right?
Mm,
Especially in terms of their battery technology and that seamless integration of hardware and software.
absolutely. They've been really innovative with batteries. They've been ahead of the game when it comes to range and performance. That proprietary supercharger network is a big asset. And they have a lot of expertise in software development and the way they integrate it with the hardware, especially in 80s, advanced driver assistance systems and FSD, full self-driving, their in-house design and manufacturing, their software expertise, that gives them a level of control and optimization that a lot of their competitors don't have. So, yeah, that combination of technology and infrastructure that really puts them in a unique position.
Okay, so now let's talk about the leadership of the company at the helm. Of course, you have Elon Musk. What's your overall take on his leadership?
Well, he's been the CEO since 2008, and it's been a period of just incredible growth and constant focus on innovation. He's really been the driving force behind Tesla's evolution from that niche EV maker to this dominant force in the auto and energy sectors. Under his leadership, they've scaled production for multiple models. They've built that global supercharger network. There have been huge advancements in battery tech and autonomous driving, but of course, his leadership style and his very public statements have also brought a lot of scrutiny, and there are potential risks associated with that.
Yeah, he's definitely not your typical CEO when it comes to his public persona. So he's overseen massive growth in production and market cap. The Model 3 and Y have been huge successes. They've built those gigafactories around the world. There's been innovation in EV technology, energy storage, autonomous driving, and that massive market cap growth really does reflect a lot of investor confidence in his vision and his ability to execute. But like you said, those controversial statements, the interactions with regulators, those have added to the volatility of the stock price and, raised some eyebrows among some stakeholders.
For sure. And it's important to remember that, there's a whole leadership team beyond just Elon Musk. You've got Vaibhav Taneja, the CFO, Tom Zhu, the Senior Vice President of Automotive, Lars Moravi, the Vice President on Vehicle Engineering. Their expertise in finance, operations, engineering, it really supports, Musk's vision and, allows him to focus on the big picture. This executive team is really important for the day-to-day management, for executing those long-term goals. Taneja, the CFO, he's critical for that financial growth. Zhu is all about that production efficiency and hitting those sales targets. And then Moravi, he's essential for keeping those innovations coming. Their combined experience is really valuable for navigating these industries and achieving, Tesla's long-term objectives.
So inevitably, every company goes through some kind of crisis or some serious challenge. Do we have a sense of how Tesla's management team has typically handled those situations in the past?
It's not always easy to find, specific details about how they've handled past crises, in the public domain, but we do know that they've had to deal with, supply chain issues, production, bottlenecks, safety concerns. And, it seems like their general approach has been to, focus on solving those problems quickly and being very public with their communication,
Yeah.
Often with Elon Musk himself using social media.
Yeah, we all remember, those challenges they had scaling up Model 3 production, and then, there's the ongoing scrutiny about the safety of autopilot and FSD. So it seems like their response to those production issues has been, setting really aggressive timelines and trying to innovate in their manufacturing processes to, overcome those problems. And then with safety concerns, they've often defended their technology. They've released data. They've engaged with regulators. And you mentioned, Musk's use of X, which used to be Twitter. That's a really central part of their communication strategy.
Yeah, it is. His social media presence is a big part of how they communicate. He uses it to give company updates. He talks directly to customers. He even responds to critics in real time. It creates the sense of transparency, and it feels very immediate, but it's also risky. There's potential for misinterpretations, controversies, misinformation. The more traditional channels like the quarterly earnings calls and press releases, those are there to give more detailed financial information and updates on their strategy. But I think Tesla has to find that balance, between Musk's informal style and what investors typically expect.
Yeah, he keeps things interesting. That's for sure. So that use of X, allows him to interact with people almost immediately, right? Announce a product update, respond to a customer, clarify something, and then you have those quarterly calls to give investors those deeper insights. But, those same social media activities have led to controversies, and, those have affected the stock price and the company's reputation at times. So it's this very public, sometimes volatile form of transparency. So shifting gears a bit, how would you assess the ethical reputation of Tesla's management?
Well, I think to really assess their ethical reputation, you have to look at several things: workplace safety, environmental impact, corporate governance, their mission of accelerating the transition to sustainable energy. That's definitely a positive from an ethical standpoint. But, their manufacturing and supply chain practices, the safety record of their FSD technology, those have faced scrutiny. There have been reports and investigations into conditions at some of their factories. And then Musk's dual role as CEO and chairman, that's raised concerns about corporate governance. Some people think those roles should be separated to make sure there's more independent oversight. And then there have been those recent legal and regulatory actions, related to product safety and executive conduct. So it's a mixed bag. They're committed to sustainability, but there are these ongoing questions about other aspects of their ethical conduct.
Okay, so now let's talk about how they manage their money, their capital allocation. Where are they putting their investments?
Well, they're really focused on expanding their core business operations. They're investing heavily in production capacity for both their EVs and their energy storage products. The gigafactories in the US, China, Germany, those are a big part of it. And they're trying to increase their production volumes and also drive down those manufacturing costs by achieving economies of scale and efficiency. They're also putting a lot of money into research and development, particularly in batteries, improving vehicle performance and safety and making progress in autonomous driving.
And the numbers back that up. They had $7.8 billion in capital expenditures in 2024, which is a big increase. And they're projecting even more this year, between 9 and 11 billion. So, clearly they're committed to growth. And that focus on boosting production capacity really does show that they believe in the long-term demand for their products.
What about their approach to mergers and acquisitions? They tend to grow by buying other companies.
Historically, they haven't been very active in the M&A space. The most notable acquisition was SolarCity back in 2016. And that was meant to, create synergy between solar generation and energy storage. But that deal was pretty controversial. People question, the strategic rationale and the financial implications. More recently, they've been all about organic growth, building and scaling their own operations, leveraging their technology and their brand. So it seems like they prefer to grow from within rather than making those big acquisitions.
Yeah, that SolarCity acquisition definitely got people talking. They were trying to build those synergies in sustainable energy, but there was skepticism about SolarCity's financials and whether it was really a good fit. So since then, they've been focused on internal growth, investing in their manufacturing and technology without making any other major acquisitions.
Yeah.
It seems like they believe in their core strengths and want to grow organically.
Yeah.
So what about returning capital to shareholders? Did they do things like share buybacks?
Yeah, they have used share buybacks in the past to return capital to shareholders. In 2023, they announced a pretty big program, up to $25 billion in stock repurchases. Buybacks can increase the stock price by reducing the number of shares outstanding. And it can also be a signal from management that they believe the stock is undervalued and that they're confident about the future. Those buybacks, the timing and the amount can depend on a lot of things: their financial performance, the market conditions, their strategic priorities.
So that $25 billion program back in early 2023, that was pretty significant. It came after, a period of really strong growth and profitability.
Yeah.
So, it suggested that they had the cash flow to do that. And it was probably meant to, reward shareholders and maybe signal that they thought the stock was undervalued.
Mm-hmm.
So, they're investing in growth, but they're also finding ways to give value back to the investors. What about dividends? Do they pay regular cash dividends?
They haven't traditionally paid regular dividends. They've mostly reinvested their earnings back into the business to fuel growth. That includes increasing production funding, R&D, developing new products and technologies. And that's pretty typical for a company that's, in a high growth phase. They're prioritizing long-term value through expansion rather than giving those immediate returns with dividends. And their dividend policy could change as they mature and generate even more cash flow. But as of now, early 2025, no signs that they're going to start paying regular dividends. They're still in that growth mindset.
So one final metric for how effectively a company uses its money to generate profits is return on invested capital, or ROIC. What can you tell us about Tesla's ROIC?
ROIC is really important because it shows how efficient a company is at generating profits from the capital it's invested in its operations. So if you look at Tesla's ROIC over time, you can see how good they are at allocating capital to get the most up-to-date numbers. You need real-time data. But if we look at their last annual report, in 2024, they had $97.69 billion in revenue, and net income was $14.7 billion. To get the exact ROIC, we'd need more details on their debt and equity. But based on these numbers, it's likely that their ROIC is positive, which means they're doing a good job of using their money to make money. In 2023, their ROIC was about 15.7%, which is pretty healthy. So while we need more data to get the exact number for last year, it looks like they're being successful at generating profit from the capital they've invested, and that's a good sign for investors.
Okay, so we've covered a lot of ground here. Their business, their management, their financials. But now let's switch gears and talk about what people are saying about Tesla in the market, who are the major owners, and what are the biggest risks they're facing. That's what we're going to tackle in this next part of our discussion, so stay with us.
Looking forward to it.
Okay, so welcome back. Let's dive into the market sentiment around Tesla. How are investors and analysts feeling about the company right now?
Well, it's a bit of a mixed bag. There are a lot of factors at play, how they've been performing financially, new product announcements, technological advancements, the overall market, regulations, and then, of course, everything Elon Musk says and does gets a lot of attention as of March of this year. The sentiment is kind of mixed. They're still seen as a leader in EVs and sustainable energy, but there's more competition in the EV market and some concerns about whether they can keep up that crazy growth they've had. And, the stock price has been fluctuating, which probably reflects that uncertainty. And, of course, Musk's activities always seem to be a factor.
So what about those analyst price targets that we always hear about? What are the experts saying about where Tesla's stock price is headed?
Yeah, those price targets are basically the analysts' predictions of where the stock price might go, usually over the next 12 months. And they base those predictions on their research on the company's financials, the industry, the overall market. But, analysts can have different opinions. So you'll see a range of price targets as of March of this year. It's kind of all over the place. Mizuho Securities, they recently raised their price target to $330 per share and gave it a buy rating. But other analysts have different views. So investors usually look at the average or the consensus price target and the overall range to get a sense of what the market is thinking.
So it sounds like those price targets are, educated guesses more than anything else. What about the more immediate things like, recent news and events? How do those affect how people see Tesla?
Oh, yeah, news can have a big impact. Good news, strong delivery numbers, some kind of technological breakthrough, favorable regulations, that can boost confidence and send the stock price up. But then bad news, production delays, safety issues, increased competition, anything controversial involving Musk, can make people nervous. And the stock price can drop. If you look at the news for Tesla so far this year, in March, it's been a mix. They've been doing really well in some markets. FSD is making progress, but competition is heating up. There's some economic uncertainty, and Musk is always making headlines, so it's complicated.
Yeah, no shortage of things to talk about when it comes to Tesla.
Yeah.
So when we're trying to gauge the market sentiment, what about those metrics like short interest and options activity? What can those tell us?
Well, short interest is basically the number of shares that investors have debt against. They're betting that the price is going to go down so high. Short interest can be a sign that people are pessimistic about the company options trading, that's looking at the puts and calls, the strike prices, and it can give you an idea of what investors think about the direction of the stock price and how volatile it might be. And, this data changes all the time, so you have to look at the latest numbers. Tesla has historically had a lot of short interest. There's always been a lot of debate about their valuation and their prospects. And because the price has been so volatile, options trading is usually pretty active.
Okay, so market sentiment around Tesla is always shifting. There are a lot of factors involved. So now let's talk about who actually owns the company. Who are the main stakeholders?
Well, looking at the ownership structure can give you some clues about how stable the company is and, what direction they might be headed in the long term. So institutional ownership, that's the percentage of shares that are owned by big institutions like mutual funds, pension funds, insurance companies. A lot of institutional ownership can be a sign of confidence in the company. And according to the data from the fourth quarter of last year, Tesla has a lot of institutional ownership. Some of the major holders are, the big names, Vanguard, BlackRock, State Street. So these big financial players, they're definitely interested in Tesla. And if you track how much they're buying or selling, you can get a sense of how they're feeling about the company.
What about the people running the company? How much stock do the executives and insiders own?
That's called insider holdings. It's the shares owned by executives, board members, and anyone who owns more than 10% of the company. Investors always pay attention to what insiders are doing, whether they're buying or selling the stock, because it can give you an idea of whether they think the company is going to do well in the future. Elon Musk as CEO and a major shareholder, he owns a lot of Tesla stock, and people watch his trades very closely. Other executives and board members also own shares. Insider buying is usually seen as a positive sign. It suggests that the people who know the most about the company believe in it, but if there's a lot of insider selling, that can make people nervous.
So how concentrated is Tesla's ownership? Is it mostly held by a few big players, or is it more spread out?
It's definitely pretty concentrated. A lot of the stock is held by those big institutions and the insiders, especially Elon Musk. And, that can make the stock price more stable because those big holders are less likely to trade a lot. But it can also make the stock less liquid, which means it might be harder to buy or sell large amounts without affecting the price, and that concentration of ownership, can have an impact on how decisions are made and how the company is governed.
Speaking of governance, that's basically the system of rules and practices that determine how a company is run.
Right.
What can you tell us about Tesla's corporate governance?
Well, corporate governance, it's all about how decisions are made, who has the power, and how the company is held accountable. So investors usually look at things like the board of directors, whether it's mostly independent directors or not, whether the CEO and chairman are the same person, and, what kind of committees they have, like audit, compensation, nominating committees. Tesla's governance has been a topic of discussion, especially because Elon Musk is both CEO and chairman. Some people think those roles should be separate, so there's more independent oversight. But Tesla does have a board with both independent and non-independent members, and they have those committees to oversee different parts of the business. Investors look at all this to see, how transparent and accountable the company is and whether they're looking out for the shareholders' interests.
Okay, so we've talked about the business, the leadership, the financials, the ownership. Now let's get into the risks. What are the big challenges facing Tesla? We've covered a lot, so let's do a SWOT analysis. Strengths, weaknesses, opportunities, threats. What would you say are Tesla's main strengths?
Well, they have a really strong brand. It's recognized worldwide. They're leaders in EV technology and battery technology. They've built that huge supercharger network. They've got a vertically integrated business model that could give them cost advantages. And they're collecting tons of data from real-world driving, which is really important for their autonomous driving development.
And on the flip side, what are their weaknesses?
Well, they are very reliant on Elon Musk. His image, his actions that can be both good and bad. Their valuation is really high, so if their growth slows down, that could be a problem. Their profitability has been up and down, and the competition is getting more intense, which could squeeze their margins.
So where are the opportunities for Tesla to grow?
Well, the global market for EVs and energy storage is growing rapidly. That's a huge opportunity. Their decision to open the supercharger network to other EVs, that could be a new source of revenue. And, if they can make more progress with autonomous driving and maybe launch that robo-taxi service, that could be a game changer.
And finally, the threats. What are the biggest things they need to worry about?
The competition is definitely a big threat. The traditional automakers are getting serious about EVs, and there are all these new startups trying to take. Market share regulations are a challenge, especially around autonomous driving and safety standards. The economy could take a downturn, which could hurt demand for their cars. Supply chain disruptions and rising costs of raw materials could affect their production and their margins. And, we've talked about this, but negative sentiment towards Elon Musk or the Tesla brand, that could hurt their sales and their stock price.
Okay, so to wrap things up, Tesla is a leader in the EV and sustainable energy space. They've got innovation, brand power, a global vision, that vertical integration, that supercharger network. Those are big advantages.
Absolutely. But they are operating in a very dynamic market, and the competition is fierce, both from the established players and the new startups that could affect their market share and their profitability. And then there are the regulations, especially around autonomous driving and the possibility of an economic downturn. So they've got to be able to navigate all that.
And financially, they've been growing revenue really well and generating strong free cash flow. But, with the competition increasing, they're going to have to keep an eye on those profit margins and how consistent their earnings are. And because they have such a high valuation, they need to keep delivering that strong growth to meet investor expectations.
Yeah, that's key. And, when it comes to leadership, Elon Musk has obviously had a huge impact, but, that comes with both opportunities and risks, and their strategy is all about growth, which makes sense for where they are as a company.
So given everything we've discussed, here's a question for you, our listener. What do you think is going to be the most important factor in determining Tesla's success over the next 5 years? Is it going to be their technology, their lead in batteries and autonomous driving? Is it going to be the power of their brand, or is it something else entirely, in this rapidly changing industry?
It's a good question to think about as you continue your own research.
Definitely. And for more deep dives into companies and what drives their performance, be sure to subscribe to the Stock Analytics AI YouTube channel. You'll find a lot more detailed analyses over there.
And just a reminder that this deep dive has been based on the information that you, the listener, provided, and it's not financial advice. If you're looking for specific stock suggestions based on AI analysis, you can find those in the comments section of the YouTube video.
Thanks for joining us for this deep dive into Tesla. We hope this has helped you understand the company better and, all the different things that can affect its future. Always remember to do your own research and think critically before making any investment decisions. And one last reminder to subscribe to the Stock Analytics AI YouTube channel for more deep dives just like this one.